Hey, Quants, this is take two since I made a whole video and was showing the wrong screen the whole entire time. So I think I have the right screen showing now. And we're just going to do a quick overview of BTC just to update based on some of the things that I had been talking about. So first things first, we've seen that price has continued to stay above the 200 moving averages, which is a good sign in my opinion. It's yet to be determined if that's going to hold for the long term. So I'll be looking for a potential breakdown of that to start maybe lightening my position. We'll see. That's I have some other things that I'll be looking at as well, but this is one of the primary indicators that I use just to help identify the macro trend. And utilizing that, I will oftentimes, let's see how far we can go back here. So it just as a very simple idea, way back here, and I'll just get a nice date here. So February 2022 is when the last 4-year cycle bear market was. You see both of these 200s had turned, their slope had turned down. The 200 EMA was below the 200 SMA. From a trend perspective, this is basically throwing in the towel. This is calling it. And so following just the 200s as a very base trend indicator for long cycles, this is in the previous cycle where you could have been exiting your position. And if you would have done that, depending on where in the range you exited your position, you likely, just using the closes, you would have been around 37,000, upwards of 44,000 for your position. So obviously you can find better exits. You never know how the market on the right side of the screen is going to play out, but it is not uncommon that once you lose that support, you come back and test that support for resistance. This one worked out quite well where it basically touched. It looks like it didn't quite touch, but within just a hair there of not touching. And then if you would have been waiting for that or playing that, of course you would have had to been patient, which could of course be very challenging in a market when you think it's going to continue to go down. So but if you would have played that, you could have been exiting around 48,000, which would have been better than 37 or 44, of course, math. So going back to the kind of where we currently are in the market, I don't think this parallel channel is necessarily a great channel to be following, but it looked pretty good before we had lost that support line there. Of course, the support line broke on other exchanges. I had mentioned that. I'm using the Bitstamp exchange, which didn't get a lot of the downside that you saw on a lot of the other exchanges. So if you want to call that all a scam and ignore it, or just look at one of those other exchanges that broke down a little bit earlier with that scam wick, or that, I don't even call it a scam wick, just a massive wick down. But we did break back up into this channel. And so, if this channel does continue to hold, I'm going to keep these lines on here and just see how they play out. But we've gotten 3 touches on this line before. If we come up here, let's just do a little bit of kind of work here and see. So this one was 31 bars. Let's see how long this was. This isn't necessarily meaningful. I'm just 53 bars. So between there, maybe if we go out about 40 bars, how far would that be? 53. So there's 43 bars, whatever around there. That's going to be November 17th. Wouldn't be a bad time to see some upside potentially atop in the 4-year cycle if we're still holding true to the 4-year cycle. And if that were to happen, $127,000, maybe it bumps up to 128 or rejects just right at 128,000. That would be playing quite in line with these other ones where it's just barely getting a break above the previous all-time high, and then it just totally dumps. So is that going to happen? Obviously, I have no clue. But if this range holds, there's an argument for that. Of course, you can draw other patterns here. I've seen other people drawing a horizontal channel here. And just by excluding some of the outliers here, you could do it that way. Another way you might look at this is as a broadening wedge, and so not making it perfect here, but you do have price action opening up on the bottom side and the top side. So you could also argue that this is going to be playing as a broadening wedge. And if that happened, same concept, you could still potentially get all the way up to the top here around 128,000 and then fall all the way back down here to 100-ish thousand. And so, of course, you know, I say 100-ish thousand. By the time it played out down there, it could be a little bit lower. Maybe it goes just a touch under 100,000. That would definitely scare a lot of people out of their positions, I think. From my own perspective, the 200 moving averages are not going to keep up with the drop falling that far outside of the market. And so if that were to happen, and I was just going to speculate on what I would kind of expect to happen at that point, is I would then expect price to come up, as I just showed before, touch the bottom of the 200s, and then just totally dump and give up the market, and that would be the end of our four-year cycle. So, of course, we'll see how it plays out. I'm not saying that's what's going to happen. Just kind of throwing it out there as a potential possibility. I'm going to go ahead and leave this line on the market. It's not drawn great. Maybe I'll try to tighten it up a little bit here. This is obviously not a super tight line anyways. You could use these bottom two lines instead of these two lines. But I'll just leave it on there for the time being. And when I go over this, maybe I'll hide it if the chart gets too cluttered. If it just seems like it's not playing to that line anymore at all, I'll just delete it. But let's leave it on there for now and see how things continue to play out. Something else I did want to talk about was some of the other indicators. So the MACD and the stochastic. So when I'm looking at both of these, one of my favorite ways to use these, or simplistic ways to use these, is just with divergences. And so I don't really see, there's a potential on the stochastic no potential for divergence here. So I'm not seeing any potential for divergence here. However, I will show another chart just because let's just do it right now. What I would like to see in terms of like something that might look nice, and this is the black hole. So if you're familiar with Superverse and the black hole DEX, I'm 100% not advocating anybody use this. If you look at this chart, it looks like crap. It's not something that I would advise anybody buy into. The only reason that I'm showing it is because we have higher price here and a lower value on the oscillator, both for the stochastic and for the MACD. And then if we go out to the current prices, we have a higher price or a higher value on both our stochastic and our MACD versus the previous values over here. And the price is lower. And so here is a potential for bullish divergence to play out. And it's just super simple. It really does. I have not found this to work well in algorithmic trading strategies. And so if you're using the skeleton key from the Quant Prime AI program, you can plug these in and you can use them. I just personally have found those to be too laggy in algorithmic trading to produce very good results. However, I have basically a systematic approach that I follow that I like to layer in some discretionary aspects to, which includes divergences. And in that context, I found this strategy to work very well. And so this one's setting up for that potential. You have, if this closes today green, then that would essentially be a confirmation that this is more likely than not to continue moving up. I'm just stating that throughout all the charts that I've looked at with this particular with this master strategy indicator and the MACD and the stochastic that I use. That is historically how it tends to play out. Obviously, if we're looking at this particular chart, there's almost zero history on here to try and base that off of, and this would be the first divergence to occur ever on this time frame. So I wouldn't play this chart. That's what I want to say there. So just that's strictly for illustration purposes. So going back here, the point of bringing that up is there's no divergence here, but I did call out the point that I like to see two greens. And so if I see two greens on this MACD, even though there's no bullish divergence that I'm seeing here. I think if I went down to the 4-hour chart, you might see, I think I looked earlier. I don't think I saw any, but the point is if I see 2 green here, I would expect a mean reversion of the MACD to play out, and the stochastic is low as well, so that could potentially follow it. And then again, maybe that takes us up to the top here, and then it dumps. We'll have to wait and see how far that plays out, but this is setting up for a potential to keep going a little bit farther is basically the whole point that I wanted to make there. So with that said, let's see if I get this right. Don't forget, I did create a strategy that's basically just a percent based, buy after this percent drop and then sell after this percent drop, with some different ways to determine how do we figure out what the top is and when do we start buying again. And so I will be going over this in the future, just haven't got there yet. And I'll also, as I mentioned before, I didn't have time Friday to make a video playing on that Sui Play device, and so that's still something to be looking forward to. And then also the Solana phone, I do have that up. I have been using it off and on as a secondary phone. I know a lot of people have used it and said, oh, I'm just going to use this as my main phone. What I did is I got a brand new phone number with that one, and so I'm not using it as my primary phone just because like a lot of my friends and all that don't have that phone number. And one thing that I will say is nice about that particular phone though is I get 0 phone calls. So something I've been just thinking about is like, if you get swarmed with a bunch of spam calls, which I'm sure a lot of us do, it's something I've been toying with the idea of, is just like dumping my own old phone number altogether, or potentially just leaving it hanging around for all the spam people, and then only giving out a secondary phone number to my closer friends that I actually want them to be able to get a hold of me, and then I just really never answer that other phone at all, but I'll give it out if I'm signing up for something, so I know when that information gets leaked, because it's not really a matter of if. Every company always leaks their data, almost always. And so it doesn't really matter what the company is. And so it'd be nice to just have that secondary phone number to give out. And if you're using Google Voice or something like that, Google Voice doesn't always, you can't always use Google Voice for signing up for a particular service. So anyways, all that said, that was a total tangent off of the other things, but I'll get into that a little bit more as I'm talking about the Solana phone when I get there. So I hope you all are staying safe in the market and hopefully staying entertained. It's been quite boring. We've been trending sideways for something like 100 bars now. And so, of course, this is the time people kind of get lulled to sleep. It is Q4, so we don't want to forget that. My expectations, the market's going to pick up just because it's Q4. And based on seasonality alone, I do expect to see some more movement in the market during the next couple of months. And so, not the time to be falling asleep. Just remember that, keep yourself safe. And I hope everyone is gearing up for the holidays. I love Halloween. And we will see y'all next time. Peace, Quants.